Good evening. This is Ken Long from Tortoise Capital Management. It's August 19th, and this case study is entitled How to Take a Professional Loss. To set this one up, you recall from yesterday's training video, what we had was a case study in Alcoa. We had made $500 in hand on the trade from about $12.70 to $12.90. We had risked 10 cents a share on 2,500 shares. We had 500 open profit in hand on an initial risk of 250. We considered the overnight gap statistics. We posed the question, how do we want to play the close? Since this was one that we wanted to hold overnight on the belief that on the first day after a horrendous volatile sell-off, the market had a positive return. Alcoa was the best performer in the Dow. All the material sectors were doing well. It closed in the upper 5% of its trading range. This was one that we elected to hold overnight. We didn't want to hold 2,500 shares because a 10-cent trailing stop was much too close. So we decided to play it in this way, that we were going to round off our risk to manage to 8%, which rounded to $1 per share. And we decided to risk one bullet, or $250 plus $150 of the open profit. So our overnight risk was $400 at $1 per share. We ended up cashing out 2,100 shares, leaving us the 400 that we wanted to hold overnight, and now with a wider stop, risking $1 per share. And so this is the result that we got. So it had closed at like $12.90. In the morning, there was a 5% adverse gap, and our 1-hour risk was $1 per share. We treat the closing price as our entry, as if that's where we bought it from. So our risk was $1 per share from $12.95, and we had risked, as you recall, 250 of core capital, which is one bullet, and 150 of the market's money out of the 500 that we made. So we had a total of $400 at risk, $1 per share, which equates to 400 shares. So our entry was $12.95. On the adverse gap down, we exited the position because we didn't get the favorable pop. Our fill was at $12.30. And so if our R was 1 and we lost 65 cents per share, then this trade comes in at minus 0.65 R, and the net was minus $275. And so what you see is they don't always work out. The hypothesis of the trade failed. We traded it at a risk that was appropriate and consistent and disciplined. Of the 6 positions that we held yesterday, Alcoa was the only one that we held overnight because of the reasons mentioned. It was the most powerful one. Now, the money that became available from the profits and the cash that we made yesterday, I'll show you in our next video how we put that together, and that was a 12-hour net day today, part of that funded by the wins from yesterday. So how to take a professional loss, how to translate daily risk appetite intraday into overnight risk, and what you saw was we took a businessman's risk, not a gambler's risk. A gambler may have said, you know, I'm feeling good about Alcoa. I'm going to hold all 2,500 shares, and that would have been horrible. The 65-cent loss would have been a minus 7R trade, and that can hurt your brain. So, thanks for your attention. Remember, manage your risk, measure your risk, be professional.